Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, euro dollar. An indecisive spinning top yesterday, but it could also be seen as a possible bullish harami, if only just. This after the previous session's key reversal down. The market once again ran into the support of not only the January and February 2022 highs at 114.82 and 114.95 respectively, but also the bright red lower bull channel line, which is currently at 115.13. And as for the July to date, very shallow bull channel. Now further down we have the combination of a dark blue neckline extension to the August to September 2020 head and shoulders top, which is currently at 114.32, with the June 2020 high at 114.22, and the rising gold long moving average currently at 114.24. Whilst on top we have the 2019 high at 115.70, the November 2020 low at 116.02, and the close-knit mauve medium and green short medium moving averages, which are currently 116.45 and 116.40 respectively, though they now appear to be separating and finally making a dead cross pattern. There continues to be one other feature which I need to bring to your attention. It's something that I have now said repeatedly since about March this year. We are set up with for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025 either over 110.36 or under 103.53, then we'd be on. Anything in between and would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the results at the end of the year will be, just that we are set up to achieve one, though right now looks very much like an annual key reversal up. So far today, not much. Around yesterday's close and sitting right on that bright red lower channel line, lower bull channel line. Cable, aka sterling against the US dollar. A slightly higher indecisive doji cross yesterday, though you could also justify it as a third bullish white soldier. The top side continues to be capped somewhat by some lightweight congestion between 131.10 to 131.44, made up from the December 2020 low at 131.33, the July 23 high at 131.44, and the lesser Fibonacci line at 131.18. Whilst below we have congestion at 130.47, plus the dark blue, very shallow, lower bear channel line, which is currently at 130.48, and that's of the July to date bear channel. Further up, we have congestion from 132.46 all the way up to 133.27, containing a pair of head and shoulders neckline extensions, which are currently at 132.86 and 133.25, and those are the May to July head and shoulders top pattern and the August to October head and shoulders top pattern, respectively. This last head and shoulders top pattern is very interesting, as it gave us a primary target below in the 131.10 zone, which was reached 4 weeks ago, and a secondary harder to reach target X1 down in the 128.97 zone. Looking at the actions below, apart from the 50% Fibonacci line, the October 23 to July 24 move at 129.11, and the congestion in March between 128.52 to 130 even, which isn't that great, well, we really don't have much below if the market breaks that dark blue lower bear channel line. The issue though is the market's taking its own sweet time in moving lower, and I'm wondering how strong that support near the market really is. Finally, much like Eurodollar, there continues to be one other feature here which I need to bring to your attention. It is something that I've said repeatedly since about March this year. We are set up with nearly 11 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025 either over 110.36 or under 103.53, then we'd be on. Anything in between, we would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. Now, so far today, a small move higher right now, up towards that overhead congestion, but no more than that. US dollar against the Japanese yen. An immediate countering bullish harami yesterday after the previous session's reactionary bearish opening black Mariboso and bearish engulfing pattern. Seems the market is still considering reaching up to target X at 157.90. This is the primary target for the move up and out of the October to mid-November bright red ascending wedge pattern. A further harder to reach secondary target X1 is up in the 159.65 area. Recent action has seen prices push up and out of two patterns, though as yet we've not fully stabilized outside of them. The first is the dark blue July 24 to January 25 bearish shift pitch hook. The dark blue upper time is below, currently at 153.74. And the second is the bright red April to November bull channel. The upper bull channel line is below, currently at 155.27. Now so far today, a seeming immediate countering action, though not by much. We have the June 1990 high below, which is currently at 155.78 as a close-in support, though it is of a dubious nature. US dollar against the CNH, the offshore Chinese yuan. An indecisive doji cross yesterday after the previous session's bearish opening black Mariboso. The market continues to be capped once again by the late August to date dark blue downtrend, which is currently at 711.49, as well as the bright red lower trend line extension to the mid-January to late April descending triangle. And that's currently at 711.14. Plus the flatlining green short medium moving average, which is currently at 712.12, and that's assisting. Below, well, we have a number of low closes in the 709.50 to 709.80 zone, plus lows at 708.96, 708 3/4 and 708.45. Looking further up, we have the declining mauve medium moving average, which is currently around 714.20. Whilst further below, we have congestion between 706.32 to 706.57, made up from the 50% Fibonacci line of the October 22 to April 25 move and the June 23 low respectively. Now so far today, well, a slightly higher open and then a strong move down through those 708.96, 708.75 and 708.45, and we're challenging that low from mid-September. Please bear in mind the next area of congestion underneath below that is 706.32 to 706.57. US dollar against the Brazilian real. An immediate countering bearish harami yesterday, if only just, after the previous session's significant bullish opening long white Mariboso. Prices punched back down through the dark blue middle time, currently at 539.08, of the mid-December 24 to mid-April 25 bearish shift pitch hook, closing just underneath it and halting at the August 24 low at 537.59. Further up, we still have the mauve medium moving average, currently at 541.48, then the 50% Fibonacci line of the April 22 to December 24 move at 544.57. And after that, not much until the October highs in the 552.25 area, plus the declining long moving average, which is currently at 554.60. Meanwhile, below we have the green short medium moving average, and that's currently at 535.68. Now, overall, in the big picture, the market still continues lower within the dark blue bearish shift pitch hook, as it has done since April. US dollar against the Mexican peso. A third bullish white soldier yesterday, this time basing the action on the green short medium moving average, which is currently at 1840.99, and punching up through the old breached dark blue lower bull channel line, currently 1850.55, and the February 2020 low at 1851.71. All the way up to once again be capped by that same flatlining mauve medium moving average that has been done in the last few days. That's just a little above at 1843.21 before falling back down to close just under the dark blue breached lower bull channel line. With rising lows and a fairly static cap, it looks like we are coming to a cusp, a point soon. in this market, and something will have to give. Now, so far today, a test up all the way to that flatlining medium moving average and capped once again for now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.